Not sure what happened there. All right, good morning, everybody. Just taking a moment to see what we got going on in the trade ideas. We're still looking at banks and any kind of correlation play. Retail numbers came in low. We missed estimates. So perhaps taking a look at something like Target or Walmart, XLY, maybe XLV. Let's take a moment to look at the sectors and perhaps identify which one of these would be in play. So XLY, that would be your consumer discretionary, more on the frivolous side. Think of your resort hotels and cruise liners and that sort of thing. So that shouldn't be affected by the retail numbers. But we would want to look at XLP. XLP would be more of your consumer discretionary products, Campbell's soup, bourbon, toilet paper, cigarettes, but also the retail stores. Right. So with the miss in the economic numbers, I believe the estimate was 3, and we came in at -3. So we missed estimates quite a bit. That was the CPI, the consumer discretion, the CPI. What is that? Next on our list will be, I don't think we're going to have any effect of this, but the Fed business inflation. I don't know that that's really going to bother us that much. Inventories. Now, this could affect us quite a bit. Companies have been stockpiling because of the anticipated tariffs that are going to be kicking in between now and Christmas. And I've heard quite a bit on Bloomberg about companies stockpiling. So how that will affect the inventories and then how that inventories report is going to affect the market today would be something worth keeping an eye on. So we do have quite a bit of data. You can see 3 reports coming out at 10 o'clock. That is absolutely going to affect the situation. So we want to be cognizant of that. For earnings today, we do got quite a bit. Netflix reports after the bell, so really excited about that. Let's go to the... One thing I don't like about looking at earnings on Thinkorswim is it doesn't allow you to scan or search from the calendar settings. We can go into the scans, and of course we could scan and go through that. There's a company called Earnings Whisperer that does a really good job of breaking out the earnings reports and who's going to be reporting, what their estimated numbers are, and then the company Earnings Whisperer actually gives its own expectations of what the report is, and and they do a really good job of that. If you haven't heard me talk about it before, there's a couple of earnings Twitter feeds that are really worth following that can give you some really good trade ideas. So again, good morning. Good morning. This is Signet. I am streaming for the Bullish Bears Day Trade Room. We're going to focus on equity products, mainly below $15. We might take a look at a couple of options products, but for the most part, we're going to focus more on shares and products that we can trade that are cheap enough that we can actually make money trading the shares. We will be looking for some gap plays. And then, of course, there are a few markets that I always keep my eye on. I always recommend people to get very comfortable trading a few products. I always use Creed with AMD as my go-to example. Creed has spent a lot of his trading life studying AMD, and I really believe that those two have spent so much time together that they're like an old married couple by now. The the benefits gained from analyzing the same market every day and performing analysis and studying the way a particular market moves has been talked about in almost every blogging community and trading center and education platform that I've been around when it comes to trading futures or options or shares of a stock. Becoming very, very proficient at a very small watch list is invaluable. The benefits of that just can't be harped on enough. And one of the reasons for that is newer day traders really have a bad habit of not stepping out into the larger time frame, not looking at the weekly or the monthly charts, thinking that perhaps there's nothing out here that can help them in their trading day. And that's just not true. The more time you spend looking at uh, the same market over and over, the more time you will start to spend looking at these other time frames so that you can identify pivot points, support and resistance areas, looking left for what I call price shelves uh, to determine areas where a trade could get hung up, stall, uh, reverse, find some support or resistance. And it allows you to anticipate trades that day by doing such a thing. All right, so give me just a moment here. I'm going to fire up the live stream into the other room. We had technical glitches the last time, and then again this morning when I began this live stream. So I just want to start a few minutes early. Good morning, everybody. It's October 16. I need a sound check. Can you hear me? Uh-oh. Yeah, and again we're going through the sound. All right. Sound check. 1 2 1 2. No sound. My goodness. Well, while the room is reloading, take a moment. I did look at Halliburton. It's not one of my gapper plays, but it did have divergence in in the daily time frame. And the higher the time frame that you recognize divergence, the more you can validate that divergence. And it was a bullish divergence. So even though the market was low, the signals that I was looking at was showing a positive divergence or a bullish divergence. And Halliburton is, you can see, it's had a hard time. It's definitely defined its new price range, but the opportunity is definitely there. All right, so we'll give that a shot. Check, check. Get a sound check. Obviously not. Okay, so you guys can hear me. I was about ready to start pushing buttons, pulling wires. Well, good morning, good morning, good morning, everybody. It's October 16th. This is Signet. You are in the day trade room. Oh, if you are new to the community, welcome to the community. Want to bring up this. This is the Trade Ideas Scanner. If you are new, there are a lot of features on our website that get overlooked a lot by new traders. New traders see the room, and that's where they gravitate. And what they miss out on are the blogs and the tools that we have available. Everybody wants to go into the courses and start learning things and jump into the next level training library, but there is a ton of content on here, including tools. Now, one of the problems that new traders have is that not only are you trying to learn about the market, you're also trying to learn about your broker. You're trying to learn about what you can and can't do with your account, all the different kinds of trade orders that you can do, and all of this stuff just becomes overwhelming, and then we overlook some of the very simple and easy things, or things that can make life easier. These tools are here for you. Lucien and Angel have been working behind the scenes for months getting a lot of this done, and the work doesn't stop. I think Lucien must be just like mainlining Red Bull to pound away at this thing nonstop, and you might not notice the changes. Some of them are real subtle, but that doesn't mean that it didn't require a lot of work and effort to get those changes into place. I don't know if you've ever tried to code a website. It's not easy. And then to connect that into search engines like Google or YouTube and get it to function correctly, it's a mess. But these tools are here for you, and you can search them. They are built in a way that you can go in and you can hunt for what it is that you're looking for. I started working with the Bullish Bears by writing blog posts about indicators, and then I grew into writing posts about options, and then finally just started creating options content. But uh, in the blogging, there is a ton of content from a ton of different people. And the reason I wanted to bring up the fact that it's a lot of different people is because we all trade differently. And that's a good thing. For one, I need somebody to take the other side of the trade, right? If I'm buying, someone has to sell it to me. If I'm selling, somebody has to buy it from me. We need someone to take the other side, but we also just need all the different kind of people out there, including investors and everything else. I'm not an investor, but there are investors, right? So, all right. So I was just kind of jumping through the list here, looking for the gap list. Dan posts one every day, but Benzinga also typically posts a gap list or a morning watch list. There's quite a few places that offers a morning watch list, and I am a I'm a big fan of taking advantage of everything we can get our hands on. So I just wanted to kind of jump through the list and see what I might like to focus on this morning that could give us some opportunity. We've discussed the fact that Thinkorswim really doesn't offer float and short float opportunity. You have to go somewhere to see that. FinViz is where I used to go to do a lot of my short float. Now, since I have been working a lot in Discord, I just use the bots in there. Let me repeat the disclaimer that I always have to repeat. The Bullish Bears does not have now and will not be getting Discord. So if you hear me say Discord, if you see Discord popping up on my screen, no, we don't have a Bullish Bears Discord. No, we're not getting a Bullish Bears Discord. So don't bother asking. We ain't got it. We ain't gonna get it. That doesn't mean I don't use it. I use YouTube, I use Twitter, I use Discord, I use everything that I can, every tool available to make my life better and to help me identify trade opportunities. If you don't know what Discord is, then you're not missing anything. The link for my personal Discord is in the room drive. If you are interested in joining it, it's free. I don't charge anybody for it because there's nothing in there that you can't find for free on your own in the social world. Just recognize that it's mine. It's not the Bullish Bears. The Bullish Bears is not going to get one. So don't spam them with a bunch of emails saying, ooh, when are we going to get that? You're not going to get it. But it's a really great tool, a really great resource. At least I think so. My profits went up by over 30% just by organizing my Discord in a way that allowed me to monitor the social media feeds better. And it didn't cost me anything. You got to love that. 30% might not sound like much, but if you listen to something like Bloomberg, they bring in these institutional traders who brag about making 11% year over year over year and win awards for making 11% year over year. And so, the idea that I increased my trade profits by over 30% just from something as simple as organizing the social media content, that's pretty impressive. Now, after my live stream today, if you want some help with working your way through that, then perhaps we can do that after the stream. So this is what you've been seeing me add is the list that Dan had posted on Twitter of the morning gaps. We've got quite a few of them in here that are looking promising. I like this. Every night, by the way, we put out a trade list, swing trade and day trade. It used to be kind of passed out to different people, and so sometimes it would be Creed or sometimes it would be Angel. I don't think it's passed out anymore. I think Angel's been handling this exclusively, but I don't want to say 100% that it's all her. But she continues to demonstrate her skills in just freaking amazing. And speaking of amazing skills, if you haven't heard about Rose, she is in the swing trade room, and although she gets lumped into the box as being the futures lady, that's really a disservice to her because she doesn't really teach futures all day. She teaches technical analysis. Good morning, Matt. I have not seen you around in a while. Glad to see you. Glad to see you. She teaches technical analysis, and although she might be applying it to the futures market, technical analysis, no matter what you trade, you need it. Shares, futures, options, performing technical analysis is fundamental to any trading strategy, and that's what she's teaching. And so she also offers amazing skills that are overlooked just by lumping her into this box that we just say, well, yeah, she's the futures lady. She's the futures lady, but she is so much more than that, guys. So if you're looking for something to watch in the afternoons, maybe when the markets get a little slow, go check out one of her recorded streams and perhaps get a little better with the technical analysis that you perform. Trust me when I say we can always improve in technical analysis. That's why it was the last thing that I bothered to learn when I started trading. It was the last thing that I bothered to learn. People always ask how I got so good with options so quickly as a new trader, and that's exactly the reason why. I focused on learning options and learning the broker, and then the last thing I learned was technicals. I've met traders who's been doing this for 20 years and they're still learning different technicals. It never ends on that one, and that's why I saved it for last. Still jumping through the lists here. I believe Benzinga should have their morning list out, and maybe Seeking Alpha has their list out. With Netflix reporting today after the bell, might be looking to take a vol crush trade in that. For some reason, I'm missing my capper lists. All right, let's see. Oh, news about the GM strike. That would be good if that ends today. All right, so we got Benzinga 100, which I'm not really interested in that one. But we've got the Benzinga 23. So 23 stocks moving in Wednesday's market, pre-marking. I'll post that into the room, and we'll just try to add a couple of these. Now, their list isn't sorted like Dan's. Dan actually takes the time to go through and sort the value of the gaps so that we're not looking at products that are just too expensive. And Benzinga doesn't. Now, if you are a member and you go to Benzinga's website, then sure, yeah, you could go in and take that. X still is on the list, and I always keep X still on the list, always. Philip, my gut on Netflix is it's going to take a volatility crush. That's my gut. And the reason I say that is because 99 out of 100 times, a market takes a vol crush after earnings. I don't care which direction it goes. I don't even want to try to bet on which direction it'll go. But I will instinctively look for any kind of trade that makes money when the premium gets crushed out of that. Because out of all the things that we don't know, the one thing that we absolutely know almost 100% is that it's going to take a vol crush. And it's very rare when we're talking about the market that we can say that something's going to absolutely do something, right? Those aren't the kind of words that we normally use when it comes to trading. But we know it's going to take a vol crush. The only reason I don't say it's 100% sure is because look at Beyond Meat. That thing had an earnings and its volatility went up. So it's never 100%, right? The only 100% guarantee in the market is that you're going to lose money at some point. That's a promise that it makes. So the bell has rang. I like to give it a little bit of price discovery. X still is always on my list for a high implied volatility. And I really like that. Now, from my point of view, to me, that means the options have a really great value. But if you're a day trader looking at shares, what high volatility should tell you is that this thing has the propensity to move a lot. If we just swap the words implied volatility with ATR, then we start putting it into a language for someone who doesn't trade options, and a high ATR would imply that this thing moves around a lot. Whenever you hear the word volatility, just replace that word with move. It has a high movement. It has a high implied volatility. Right? So I like keeping my eye on this market. It's an $11 stock. It's already moved 3.5% today. This thing is, I trade it all the time. I'm I'm really thinking about, sending it Christmas cards and inviting it over for Thanksgiving. We spend so much time together. Often it correlates with USO, the oil fund. And so if you wait for like oil numbers to come out, they will play against each other and you can do a little bit of pairs trading. Uh, you got to take advantage of what you can when you can. So, dealing with these smaller markets, anything that we can do to tip the odds or the scale in our favor, that's what we want to do. All right, so let's see. I don't think we got anything until 10, so we're good on the reporting side, which means we can jump over to the visualize, and we want to look at the AD. Now, if you're not familiar with looking at the AD, just start with the Dow so it doesn't feel so overwhelming. So with the Dow, it's 30 stocks. Think of a basket, and we're just going along the shelf, putting things in our basket. These 30 stocks form the basket of the Dow. They're mega cap stocks. Any one of these on their own, should they get hammered due to some bad news, could tip the Dow over. One great example I always talk about is Walgreens when it missed early in the year. It took the Dow down over 500 points, while the rest of the market was bullish and ripping to the upside. Learning what I'm looking for in here. It was great. We made a lot of trades that day, just playing the inversion. What we're looking for here is divergence. So a balanced 50-50 market would be 15 going up and 15 going down, and we would want to see it just about the same amount of money flow. But we're not seeing that. We can round this to a 15-15, but look at the money flow. It's 3-to-1. There's 3 times more money going out or declining than there is coming in or advancing. So what this is telling me is right now there is distribution going on in the Dow, and that could be only from one or two, except that when we look down here and we see all these red, we can tell it's not just one or two, right? Most of the 30 cap stocks are either flat or negative, and there's maybe 3 that are standing out. One is Dow, D-O-W, the chemical company, Disney, and Johnson & Johnson. But notice how far Johnson & Johnson is off of its high. It was up 1.5%, and now it's just crossed the 1%. So chart analysis should come down to what you're comfortable with and what you can apply. I don't know much about Mac and MacBooks. I would always recommend just using what's really comfortable for you. People who use TradingView tell me that they love it, and I'm not comfortable with TradingView, and so I don't like it. I'm trying to like it, but I don't like it. So if you need a web-based trader, try TradingView or FinViz or Tradeovate. If you want an application trader, then there's Tastyworks or Webull. When it comes to not necessarily charting, but tools, Webull's got some really great tools that you don't even have to set up. Scanning features, industry comparisons, sectors, those things are really, really great. And you didn't have to learn how to use the darn thing, right? It didn't take any extra uh, time out of, to learn about it, and you don't have to pay for it, right? TC2000 looked really exciting to me when I first heard about it. And then I found out you have to buy it or you have to rent it or pay for it in some way. And why would I do that? Unless it's going to be my broker. And even then, I wouldn't like it. I'd rather use something that doesn't cost me money. So shop around. When I first became a trader, I opened up 10 different accounts last year. And I know that sounds crazy, but I did. I had Webull, and I had E-Trade, and TD Ameritrade, and Fidelity, and I had the offshore CMG, and I had Robinhood, and Thinkorswim, and Tastyworks, and count them up, count them up. So if you don't mind paying, then great, keep using it. I just recommend people use what's comfortable for them and what they understand. And if you've already spent time and effort learning that broker or that platform and you can do analysis, oh man, keep it. All right? Keep it until it doesn't work for you. If you do want a free downloadable application, then hands down, Thinkorswim is your best way to go. Not only does everybody else use it, but it's customizable, um, and there's a ton of videos to help you learn about it. Everybody recognizes it, but Tastyworks is a good one. I love doing using Tastyworks for the way that it does options, and then Webull. First thing I do in the morning is I look at the global market. I want to know what happened around the world because it's going to affect our market. And I didn't even have to program this thing. I just come in and click global, and there you go. I can see Asia by itself, Europe, North America, or I can see the global trading. So I don't recommend using trading stops or trailing stops. Um, Stops are, kind of like politics and religion. Everybody has an opinion on it, but nobody wants to hear anybody else's. And you can't change anybody's mind, right? So me, I'm a big fan of not using stops and trailing stops. I think that if you need a stop to protect your risk, then you're probably trading too big, and you just need to adjust your trading size. So we could spend a lot of time talking about different ways to protect yourself or to protect your account or to have a certain kind of trade setup. This wouldn't be the forum for that. I don't think we would necessarily have the time in our day to do that. So I'm only going to be streaming for a few hours. But since I don't use that in my day to day, I don't recommend using it. I'm really not the one that you would want to get an opinion from on that one. My email address is in the room drive, and if you send me an email with that question, make sure you put Bullish Bears in the headline or in the email header so that I will see it. I can try to help you develop a trade strategy that uses a stop, but it, fair warning, stops are something I don't believe in to limit risk. So I'm not necessarily the best source for that, but I will try to help you out with it. See if we can find a way to put it into your strategy. IPWR on the 5-minute broke the $5 roundy and is continuing to rip to the upside. Just moved another 50 cents while I was speaking and is still marching up. And we are getting a bit of a pullback. It slapped the 550, which is the quarters and halves are strong areas of resistance. This is your opportunity in that pullback to go long. Now, a lot of people will say, oh, it's moved too far already. I've missed my opportunity. No, you haven't. No, you haven't. If you look at this and you say, well, I want to go long, but it feels like I'm too late. Wait for the 5 to be the support. If this holds the 5 like it should, go long. Go long and decide how much risk you're willing to put into this and say, well, if I get in at 5 and it breaks 475, I'm getting out. Right? And then that's 25 cents because you're looking for it to go back to 5.5. Risk 25 cents to make 50 cents. That's not too bad. I'm not a big fan of 2 to 1, but 2 to 1 would work. But we need to see this candle resolve itself. I jumped over to the 2-minute to get a little closer to the price action. We want to see a candle close, and we want to see it hold that $5. Just as the 550 was our overhead resistance, that $5 should now be our support. And if it can't hold that roundy, then there's a little bit of worry there, right? And you might decide you don't want to pull the trigger. Me, I'd rather not wait. If you're new and you haven't heard me talk about this yet, confirmation trading versus aggressive trading, neither one of them is wrong. It all comes down to your preference. If you wait for a break back above the price structure that we're sitting here looking at, you would more often than not avoid getting shook out. But if you wait, you also miss your move. So instead, I'd rather just trade with a clear understanding of my risk, how much I'm willing to lose, and how much I'm looking to gain. So it didn't hold the 5. We're still getting our pullback. Giving this a little bit of perspective, let's throw some Fibonacci on here and try to recognize where our next level of support would be. The Fib 618 is showing at 443. To me, the 4.5 would be a stronger area of support than the 443. Why am I willing to say that? Well, because everything is kind of arbitrary, right? Instead of drawing a support line or a resistance line, we're better off drawing support boxes or resistance boxes, because a few pennies one direction or another won't really matter, right? This just crushed right through the 4.5. The 4.5 should have provided some, but we popped back above it before the close. The short-term volume trend is negative, but the mid-term and the long-term volume trend is positive. This is looking like it wants to give it all back. So if I turned off this pre-market, what you would be looking at is a market that just closed the gap, right? We took a nice little pop. What was that? A $1.25 up, and then it gave it all back. It moved 85%. So now we're back down to nothing. I think I'm just going to put this on the list and move on to something else. Let's see where we are with the VWAP, though. What did we get out of that? Yeah, that'll work. So it also broke the VWAP, by the way, on the 1 minute. Take this out to a larger time frame. It broke the 5-minute VWAP as well. All right, so we're going to move on from that. Try to find something that has not yet made a move and spent its energy. ENDP is up over 12%. What a move in that thing this morning. ENDP is always on my list. It's one of the 5 or 6 that just stays on my list. ENDP, USO, X, Sirius XM. Those are just ones that Vive is another one that's up 86% this morning, 85%. Massive moves in the market. Notice it's trying to close the gap. It closed yesterday at 382. And it's trying to work its way back down. I can still hear Lucien in my head from when I was a new trader watching one of his videos, and he was talking about how a market wants to close the gap, and I still hear him in my head all the time. Yes, a market wants to close the gap. More often than not, it will gravitate back to its gap. Don't know why, it just does. It's also a part of how we analyze a trend day versus a range day so we can identify what tools we want to use in our trading. The volume one is in the Discord. It's the very first one. So if you go into TOS 2, where it says volume, and you scroll all the way up to the very top, you'll see that. SENS is down 3.2%, and it's easy to borrow. I'm going to put that one on the list. Did that not get in there? Oh, yeah, it's at the top. So it fell and caught the 200 on the 5-minute. See if it can hold here, build a little bit of support, and maybe we can get a pop on this thing. If it breaks the 200, I would be looking to take this to the downside, but recognize that it has pulled up quite a bit. Gaps work in both directions. Lucien did a really great video on that, by the way, and even if it is a few years old, the gap law hasn't changed, right? So if you go to YouTube and just type in bullish bears gaps, you should be able to find the video and look for something that's 2 or 3 years old. Don't, don't get distracted by one of our more recent videos that might just be talking about gap and go plays. But Lucien did a really great job on that. Yep, absolutely. And anything that you want to learn about in the market, if you go to YouTube and you just type in bullish bears first, and then whatever it is that you want to learn about, more often than not, we have a video of it. If you ever go to YouTube and there's something that you want to look for, and you type in bullish bears, I don't know, dividends. If you type that in and you don't get a video that pops up, let us know, because that means we're missing something that you're looking for. And between me and Creed and Dan, and we will make some content and get that out there, right? So your feedback, all of you guys, your feedback keeps us moving forward. When we start to slow down and start thinking, man, what are we going to do a video on next? It's your guys' feedback that helps us say, you know what else we're missing? This is what we're missing. And then we can go to that product, or, make a video on the next thing. So by all means, use your resources and let us know if you're trying to learn something and we don't have it. I'm interested in learning more about being a investor, for an example, and that's a totally different kind of trading. And I haven't had the time lately to really dig deeper into it, but I want to get into that. I want to get into like earnings per share and dividend and PE, revenue, cost, all that stuff that I don't know very much about. And it's okay to say, I don't know anything about that. I've never been afraid to just admit that I don't know something. But when I thought that technical analysis was all we needed, I learned that that was a mistake and that I was blinding myself. So I don't believe that anymore. We need fundamental and technical analysis. We have to tie those two together. So if you can also learn about investing and being able to recognize an undervalued company that has potential, there you are yet again adding more tools to your toolbox. And so, from my perspective, that's my gapping weakness. I don't have that kind of knowledge yet, and I want it. And that's kind of where I want to focus next. X Steel has proven yet again why I watch this market every day. I love trading this. The pivot point from yesterday, if we look left, you can see why we just had that doji candle that is now turning into, what is that, like a spinning top? It's a rejection candle either way. We can name it Bob's uncle if we want to, but the point is we took a rejection there, and if you look left, you would see why. We had these pivot points from Monday. We had a price shelf here on Tuesday, so price definitely respects that range. I'm interested in taking a position in this from the pullback. So if it gives us the opportunity, I don't think it's going to fade back down to the 200. That would be nice. I just don't. I don't think it's going to give us that kind of love. But even a pullback to 30 to 35 would be good enough for me. I'm not greedy. I'm not too greedy. Maybe just a poquito. Just a poquito. So if you're a newer trader and you're not sure what moving averages you want to use, I believe Creed did a video on it, but there's a self-adjusting moving average out there made by John Eulers. And what it does is it evaluates the amount of volatility that's going on in the marketplace, and it adjusts how close or how far away from price it wants to be. The problem with say a 200 moving average is it's really slow and it doesn't react quickly enough to stay with price. But if you put something like a 5 moving average on there, then it's very whippy and it's jumping all over the place because it's trying really hard to keep up with price. The self-adjusting moving average will increase its value or decrease its value depending on the amount of volatility in the market, and it gives you just the right amount of speed and follow so that you can get a good perspective on trend. The MAMA and the FAMA, it's the MAMA, the mother of all moving averages, combined with the FAMA. There are white papers on that. You can learn all about it, but really it just makes your head hurt because he used NASA rocket science mathematics in that indicator. That made it kind of difficult to learn how to code, by the way. But if you're struggling with moving averages, try using one that adjusts itself. I think you would find some value in that. Right now I've got the 1234 highlighted in this cloud, and we had a crossover right around the time that price broke the 200. I'm looking at the pullback here to the 30. Round numbers like 30 and 30, 40, 50, they're not bad, but quarter numbers are better when it comes to looking for support and resistance areas. I want to see this hold the 30. If it doesn't, I'm not too concerned because I would really expect the 25 to be a stronger support than the 30. Not only because the 200 moving average is there, but also because it's a quarter number. I don't know why, but those psychological numbers, they do have power in the marketplace. Creed, you're a pimp, buddy. You're an absolute pimp. I don't know about you, but that Mama Fama coding hurt my head. There's another one like the Hyodine descriptor. They call that an automatic trend line. It is also a self-adaptive moving average, but you set it at a higher time frame, like a 50, and then anything above it, you would look for bullish trades, and anything below it, you would look for bearish trades. There are quite a few of those types of moving averages, but John Euler was the first one to do it, and I really think he did the best job at it also. Um, and if guys, if there's a market you want me to take a look at, don't hesitate to give a shout out. I would happily jump over and take a look at it. Um, I'm not really interested in looking at options trades or expensive markets, but Lorraine, I will take a look at Apple for you just because Apple moves the market. It's such a large market cap that if Apple, so goes Apple, so goes the market, right? So I will take the opportunity to go look at that for you. PBYI, Puma Biotechnology. I really think that this thing, we traded this last year, I think, quite a bit. And it's been off the radar from my perspective for a while. I haven't had the opportunity to trade it in quite a bit of time. Just set a new high a day on the 5-minute, or I'm on the 2. Let's go to the 5. Set a new high a day on the 5-minute, broke the 200 with strength, found support there. Looking at the 710, the question is, where's it going? The next area that we need to worry about is 7.25. So 725 would be the next area of overhead resistance. My price target would be 750 for the day, not for the current swing or the current pivot, if you want to use those words, but for the day. I think we could easily hit 750 today. To scale in or to scale out to hit that 750 would be more appropriate. If I was to trade this right now, I would look to scale in. Why? Because, well, it's already made a pretty good size move, right? It's up over 5%. Maybe I'd start out with 250 shares, possibly 500 shares, right? With my small account, a $7 market, I'd probably honestly start out with about 250 shares at the most. If it broke that 25 with strength and maintained its position, then I'd look to scale in a bit more. And by the time it crossed 740, I'd like to be up over 500 shares. If we look left, you can see all of this is going to be our resistance, right? And if I'm calling the 750s, that's putting us at this price shelf from last week, right in that range there. To get there, we would have to get through all of this clutter. It's going to take a lot of market participation to do that. And one thing that we can do to look for that market participation is to look for the volume weighted MACD on a higher time frame. I like to step out to 30 minutes if I'm going to trade the 5. The 30 makes an appropriate measurement. You can see the trend and the momentum, the strength of the move in volume is positive. So it did decrease a bit from yesterday, but we're still looking pretty good. And that makes sense, right? You can see that every night it decreased because it's overnight. So that kind of decrease is to be anticipated. Getting used to using this takes a little bit of practice. It's not like your regular MACD, and you got to recognize that it's looking at volume. Volume falls off, but the market doesn't close, right? 4:30, the market, quote, closes, but it's still open till 6. So there's that after hours trading, and then there's the pre-market trading. That volume is analyzed by this, and so it throws it off a little bit. It's subtle, but you still got to appreciate the effects that it's going to have on it. The trend and momentum is still pointing to the upside, though, with the volume, which means we would still be looking to take the upward trade. Now, Tasty Trades talks about aggressive contrarian. So when we're looking at this, we ask, has it moved more than 10% in the last 10 days? My guess is yes. To find out, all we need to do is use our drawing tool. Come on, Thinkorswim. So if I just stop my tool right there and I look, that's 42% that it moved between the last 18 days. So I got too many days there. There's 9 days. So yes, it moved more than 10%. Tasty Trades talks about aggressive contrarian. And what they're talking about when they say that is that you buy weakness and sell strength. That takes some getting used to, right? It goes against your nature, right? Everything that you're looking at says this is bearish. Why would I buy it? And yet, if you look statistically speaking, a market that's made that big of a move in that small of a time frame is more often than not going to reverse. The criteria that they defined, you'd have to watch their video, right? So they do have some criteria, they do have some rules. And I believe that they used 1/3 of a standard deviation for their option strikes. Now, for those of us who don't want to use options in our trading, that would be taking the cone of probability and using 1/3 of that. So if you go in and you type in cone, there's your cone of probability. Even people who don't trade options can still get value out of this because it's showing you how far it could move to the upside or the downside in the time frame that you're looking at. So there's your expected move for PBYI in the next month. Get rid of that cone. Let's go take a peek at Apple. All right. So Apple gapped, took a big jump the other day, and look at all the wicks up here, showing that the sellers really stepped in the last 3 days and rejected this moving higher. Every time it moved up, the sellers took it back down. So let's see what we can do with this for today. We gapped down in the overnight hours, rallied back up, and have faded from the open. And I bet if we was to overlay SPY on this, they would correlate really strong. It broke the VWAP on the 5-minute. It's kind of all over the place. It's hard to tell if this is from media or if it's moving with the rest of the market. And the best way to check is just to compare it to make sure. Because if it's moving in line with the rest of the market, trading Apple would be no different than trading SPY. So there you go. They're moving in lockstep this morning. How much are they in lockstep? You can go to beta. When something has a beta of 1, then it moves dollar for dollar or tit for tat with the market. When it has a beta of less than 1, then if the market makes a $1 move, it would make less than a $1 move. And if it's above 1, then when the market makes a $1 move, it would make more than a $1 move. For some reason, I don't have a beta yet. There must be a bit of a lag. And when the beta kicks in, we got a few more minutes, it looks like, before it kicks in. So if are you looking for a swing trade on this, Lorraine, or just a day trade? A swing trade. Well, let's get rid of all this ugly stuff all over the chart. So for a swing trade, I'd be looking for this to stay long. But I mean, like we talk about often in the swing trade room, looking at Apple or looking at Microsoft, you're looking at SPY, right? So are are we bullish on the overall market? Absolutely. Even if today the market happens to go down, I'm still overall bullish in the marketplace. The same with Apple. The only thing that I'm looking at here is that Apple is giving us an opportunity to go long, right? I would do plus 45 days and I would go bullish because there's absolutely nothing to tell me that the market is going to crash, right? Now, there are a ton of economic events that could cause the market to crash, but we're all sitting on that risk. And whether we're trading Apple or Boeing or Netflix or anything else, if one of those events kicks off and tips over the market, there won't be a safe place. Maybe gold or silver, right? Or, the REITs, insurance, that kind of stuff might be somewhere to hide. But the pullback right now is your opportunity to go long. And if you went 45 days out plus 45 days, so at least 45 days in your trade, then at least back up to the top would be a fair target. 240 would be my final target. So maybe you could scale out of your position, taking profits along the way. But if your overall perspective on the market is bullish, then whether you're looking at Apple or Netflix or Microsoft, well, not Netflix. Netflix has got earnings. So let me just quit saying Netflix. But if your overall perspective on the market is bullish, then trade Apple bullish. All right, what else we got here? Let's go back into something that we can all afford. USO sitting flat. X steel sitting on the moving average. That's the 12-period moving average. I'm a big fan of the 12. So this thing's already moved 1%, but X steel can move 3, 5, 6% in a day with no problem. I really like this thing because it moves around a lot and it's not too expensive. It needs to hold. Turn the price back on. Yep. It needs to maintain that position. So here again is where we get into the confirmation trader versus an aggressive trader. If I aggressively want to take this to the downside, I wouldn't wait for it to break. I would get in now. That way, I'm already in it when it breaks this range and everybody else piles in and pushes my trade lower. If I wanted to trade it to the upside, I wouldn't wait for it to break the top. I would get in now so that I at least make profits between 11.28 and 11.38. Right? And then if it gets rejected at this new level, I would have at least made that much profit before the rejection, pays for my fees, yada, yada, yada. Right? So neither one of those strategies is wrong. Being a confirmation trader has its plus, has its positives, but it also has its negatives. Being an aggressive trader has its positives, but it most definitely has its negatives. Let me jump over to a 5-minute, make this bull flag more apparent. Now, price patterns on a lower time frame, we can recognize them, but we don't really want to trust them, right? So even though I'm sitting here saying we're looking at a bull flag, that doesn't mean that we're going to just give that thing 100% respect and pull the trigger because we're looking at a bull flag. But we do have one. It's clearly defined. It's a beautiful flag. And it's coming down to tap that 200 moving average. That's also the 1125 mark. That is what we call confluence, stacking the odds in our favor. The 1125 should provide some very strong support. I could pull the trigger right now on the understanding that the 25 is my line in the sand. If price breaks that 25 and falls down to 20, I could exit the trade. I'm looking at 5 points of risk. Now, 5 points is nothing, right? If five pennies is absolutely nothing. But I'm not basing how much risk I'm putting into this trade on a money evaluation. I'm basing it on price shouldn't break that 25 if I'm bullish. It shouldn't. It should stay above it. And if it doesn't stay above it, I don't want to be in the damn trade anymore, right? It has failed to do what I believe it should do, and therefore I just need to get out. Forget how much money I'm putting up for risk. The fact that it doesn't hold that 25 says my analysis is incomplete or wrong, and I need to get out of the trade. So I could easily risk 5 cents there, right? And the candle hasn't closed yet, so that 25 is not technically violated. I'm on the 5-minute, and we've got the VWAP underneath us. We've got the 12-period moving average underneath us. And that 25, again, is not violated until the candle closes. Now, the way that I analyze price is not some rubber stamp that says if you're not doing it my way, you're doing it wrong. That's not the way things work in the marketplace. You might see a break below 1125 and say the 25's been violated because price broke that level. Me, I would rather wait for candle close. Neither one of us is wrong. But whichever way you choose to do that, whichever way you want to analyze the market, just stay consistent. It's pretty much the only rule that I tell people that you need to follow. You need to stay consistent in whatever it is that you're doing. If you're jumping back and forth to a bunch of different styles of analysis, you're going to fail, right? And that's not what we want. I'm really waiting for the day that somebody tells me that they broke the $1 million mark because of what they learned at the Bullish Bears. When I started trading last year with my $300 Robinhood account, I knew nothing about the market. And everything that I am today as a trader is because of this community. And my family and my life will never be the same. So, paying it forward. That is, you can't even put a price tag on that. So the candle, notice we came back above the 25. My analysis still pulls that we're still bullish. This is not a change in market sentiment. We're only looking at a pullback, some consolidation. Short, mid, and long-term volume trend are positive. The 25 is still not violated, and I would be looking to take this to the upside with at least a 20-cent target. So I think we've analyzed that about as much as we can. Had a call out for VI, VE. We'll take a look at that on the 5-minute. This has faded drastically from the high at the Globex, but it's still up 100%. 100% on the day. Anybody who caught that yesterday, that increased volume coming in yesterday, cheers to them, right? I didn't catch it, obviously, but cheers to them. What we've got now, though, is we're tangling up underneath the moving averages, and we're pushing against that 50. The cloud that you see is made on a 1234 moving average, And then the orange line here is the 50. This is breaking the 50 from the downside, but it's not broke it yet. My analysis with the previous chart holds the same with this one. The 50 is not broke until the candle closes on the other side of it. But it's pushing on it right now. If we take a look at this with some perspective, why the fade? Well, if you were trading any of this and it moved 100%, you would take profits, right? Well, so did other people. That we're not necessarily looking at a market that is no longer bullish. We're just looking at a market where people took profits. And that makes absolute sense, right? Nobody would want to give up all of their gains. Nobody wants to be the last one to sell. So when the selling started and it broke the VWAP, everybody else sold too. And of course, it got everybody's attention. It was all over the media. So as people were selling it, others were picking it back up. And if we start to zoom in here and look at that wick from here, the sellers dumped on the break of the VWAP, and yet buyers were more than happy to jump in there and take it right back up again. And then that spooked people. So once it kind of topped out here, started to fade, people jumped back on it again and took it down at the open. Now we're looking at a test of that VWAP. And the VWAP and the 50, they're almost merged. And this was a rejection of both of those. But there's a soft rejection and then there's a hard rejection. Right now, this is looking like a hard rejection. That's a $1 move between 8 and 7 that it was rejected in one candle. We're on a 5-minute. So this thing's moving around quite a bit. In a move like this, we could take 200 shares, maybe even 100 shares. You don't even have to get greedy with something like this. You're looking at something like this and you want to take a $1.50 move in the next 15 minutes. You missed your opportunity if you're not in it yet. You missed it on the bounce. A break back above the 50, I'd be looking to go from 8 to 10. It's $2. I would fade that move though. I wouldn't expect to take it all with one bite. I also wouldn't wait if you're going to trade this. I'm more aggressive than I am confirmation. So I wouldn't wait for it to break the 50 and I wouldn't wait for it to break the VWAP. I would get in now, maybe put in a buy order at the 725, let this whippiness work in my favor. 725, I'd even put an order in somewhere around the $7 mark, say 150, 200 shares at 7.25, and then 150 to 200 shares at $7. And I'd go long with it. My stops for something like that, since we would be averaging down with those two orders, I'd be willing to risk 650, but no more than 625. If it breaks below 625, we'd really have to reevaluate whether we'd still want to be in the trade or not. Because if you look left at this price shelf here, that should be some really good support at the 6.5. If it breaks that, you got to kind of ask, do I really still want to be in this trade? You wouldn't want to ride it all the way down to the VWAP. Definitely wouldn't want to be in it below $6. All right, so getting in with an order at the 7.25, that looks like you might have missed that opportunity now because that candle is closed and we're on to the next one. This is setting higher highs and higher lows. It is trending to the upside. So the 7.25, that's no longer an option, but 7.5, yeah, you could get in at 7.5. And we're getting another fade back. So that 7.25 just might be a play after all. The question really comes down to, are we still looking at a bullish market? And as far as I'm concerned, yeah, we haven't seen this this end yet, but the sellers keep stepping in at that VWAP. We look left, try to identify any other areas that could be giving us some problems and that should help us with some support. 6.25 to 6.5. So that whole 25-cent range, price really needs to maintain that position. If it doesn't, I wouldn't be willing to put any money on it after that. Going along at any point above that, I'd be willing to do. And then say, where would we get out? My risk level would have to be somewhere around $6 for that, but that would be a trade for the day, not just for the next 10 or 20 minutes. I'd be looking to take this thing back up to $9, $10 if we could get back above that VWAP. Those sellers keep stepping in. This algorithm buying and algorithm selling. So a firm will call up their IT guy and they'll say, hey, I'm going to dump, 250,000 shares of VIVE at VWAP. So the algorithm will kick in, and whenever price gets to VWAP, it will do what it's told to do, buy or sell. You can check the amount of institutional shares by using the Discord. It's one of the reasons I like Discord. We can go into this later on. I just want to show you how you would do that just real quick. And again, the Bullish Bears does not have Discord and will not be getting Discord. Exclamation mark SHARES VIVE. There's your float, 11.6. Your short ratio, 4.8. Institutions, 19,000 shares by Hightower. It's the highest. And then Vanguard Group has 13,000 shares. And then for insiders, there's the people who have been trading it who work inside the company. Jim Robbins on 8/6 was the last time there was insider purchases. Algorithms are in everything. And if you think about it, it makes perfect sense, right? Because trading institutions are in everything. And back in the days, algorithms might have been, some rare thing that maybe only Goldman Sachs had, some of the big name firms. But now all the banks have their own algorithms. JP Morgan, Wells Fargo, all of them. Damn, Red, sorry to hear that, bub. When you journal your trade, what is going to be your answer for your trade loss today? Was it a misrepresentation of analysis? Did you miss something? Did the PMI numbers catch you? Wash sale rule. So I would assume you're talking about the profits from a sell of a trade being used to get back into a trade. that would depend on your broker. And so I don't really know, because it would depend on which broker you're using. Yeah, damn, Red. Oh, taxes? Whew, I am definitely not the person to to ask that. Um, there's a tax company that I was getting into contact with because I'm so let me back up a step. When we want to write off our costs and expenses for being a trader, the one of the ways that I heard that you could do this is to start an LLC and to start a C corp. And your LLC would be what you would use to open up the brokerage, and your LLC would be owned by your C corp, and then you would be paid by that C corp. Um, but all of that was kind of wrapped into a tax book that I was reading, and it actually had a company's name in it. Send me an email. My email's in the room drive, and I will try to find that book information and the company whose name was in it. Um, I I can't tell you if it's a good company or not, but it's been around for like 70 years. So, they're not some fly by night pop up. Um, and that's the best I could do is give you the resources that I've got tucked away, because that's what I'm looking to do. Hopefully by this time next year, I'll be running a C corp, which will own an LLC corporation, and I'll be doing my trading through that. And the reason that you see most things that are just very, very expensive, and you think, God, who would pay for that? That's why. Someone needs a tax write-off, and they go and they pay for like a class that costs $7,000, and they write it off at the end of the year. When I was looking at education companies that do markets, there's one in Kansas City, and I'm from Kansas, so that got my attention. They have an options education class. Their options education class is literally $7,000 for 6 weeks. And by the end of that 6 weeks, they say you should be a proficient options trader. But if you're not, and you fail their class 3 times, then they'll just give it to you free for life. But you're going to pay that $6,000 or $7,000 each time until you till the third one, when fail, and you're no longer uh, then you get it for free. And when I seen the price of that, at first I just was like, who in the heck would pay for something like that? And well, people who are running, an LLC connected to a C corp would pay for something like that because they're looking for a tax write-off. It's the reason I'm looking at it though is if you run the LLC with the C corp, then you could get something like right, um, and also all your commissions. You can write your commissions off at the end of the year. So I'm interested in looking at it from that point of view. But when it comes to education in the marketplace, most places are expensive because of that, right? This company here, the Online Trading Academy, you, thousands and thousands and thousands of dollars they want to teach what we teach here for, I honestly don't know what the monthly Bullish Bears price is. It's like $30, right? There's a reason that Dan and Tim and Lucien keeps the price uh, reasonable. I don't have another word for it, but reasonable. They keep it appropriate because the rest of us, the normal people in the world who don't have C corps and LLCs, we we can't afford this stuff, right? Maybe this company has good education, maybe they don't. I don't know, but for $7,000, they should come to my house and teach me sitting on the couch, right? They ought to make me dinner and go warm my car up when it's cold outside. $7,000. I mean, come on. It's inappropriate, right? But uh, the Bullish Bears wanted to make sure that the rest of us don't get left behind, and they keep the price for our community at a level that's appropriate to pay for the things that are running in the background, right? Like our website and trade ideas and the gap scan and all of that kind of stuff. So sure, they do charge to have the community, but you know they're not charging this kind of stuff. That's outrageous. And I don't know that this company actually does advanced level stuff, right? When I was developing my advanced level trading strategy, probably have some like trading strategies or I don't know. But is it next level advanced trading with deltas and strikes and options and you know analysis? Probably not. Probably not. And you're still paying $7,000 for it. It's just it's an insane amount of money. But people pay it because it's just a write off. XBIO has pulled back to a price shelf. I'll kind of scrunch this in a little bit so we can zoom in. It looks like it got rejected somewhere near that uh, quarter. So the 175 took a rejection. And if we look left, it's kind of hard to see. There's a price shelf there. I say a price shelf because when I call it pivots, people get confused with floor pivots. And I've learned to just avoid using that word. It really is a pivot. That price came down and hit that pivot, or I should say came up and hit that pivot, and was rejected, right? But if we'll just call it a price shelf. So we hit all these various levels with strength and conviction, couldn't hold it, and took the fade from it now. Excuse me just a moment. All right, sorry about that, peeps. Still looking to have the wife's cardio checked out. There's problems with the heart, problems with the liver, one step at a time. But doctors, 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 doctors. So the XBIO, whatever caused that pop, doesn't look to be sustainable. It's definitely faded back to the 50. The 50 on the 4 hour is a pretty respectable moving average, but we can't trust a moving average in a sideways market. So even though we recognize that the 50 is there, we can't lean on it or trust it to actually hold up. All right, let's see what we got with a flag. Anything pulling a flag right now? No. All right, no flag. Now, I did do a video on market maker move. I was getting some emails from people who were misunderstanding what the market maker move really is. So and it's not necessarily an options thing either. So don't think that, oh, that doesn't have anything to do with me. That's for those options people. Not necessarily true. Um, it is calculated based on implied volatility, but it can be used by anybody. Anybody who wants to kind of get an idea of where a market could go. then the market maker move can give you a bit of a heads up. Thinkorswim is just laggy today. BNGO, unlike the last market that we were looking at, spiked up pretty close to $3, but it hasn't completely fallen back out yet. You can see all the sellers stepped in and hammered it back down below the 200, all the way down to $1. But yet the buying has stepped up. Let's jump into a smaller time frame. So you can see we tapped that 50. We're on the 5-minute. Crossed the VWAP, pulled back again to the 12, and now we're taking a run. If we define our open range on a 30-minute, we'd be looking at 162 for the top side and 105 for the bottom side. Do a little Globex measurement for our Fibonacci, and we're looking at the 231 as the next level of resistance overhead. This is moving with quite a bit of momentum behind it. These are big, strong candles. Normally, when a market starts to slow down, the candles get smaller, right? You can see here where the candles were small, they got bigger, and then they got smaller again. So the growth of these candles are showing you the strength in the move. Notice that there's no wicks on the top of these candles. These candles closed moving up, and each consecutive candle has been moving up with strength. So BNGO, it's a $2 market. It's not very expensive. It's up over 280%. So that has to be recognized that, of course, as with all things that we deal with, there is risk in the trade. And when this opens back up again, I believe we're froze at the moment, right? This is one of those that is halted. When this opens back up, this could, get a bit whippy or a bit volatile. No. Yeah, too risky. I mean, technically you can't, quote, get in while it's halted. You could put your order in place, and then as soon as the market opens back up, it can snatch your order, right? But for me, with my small account, I'm not willing to take that risk, right? This could, people could right now be piling sell orders in like crazy. And when the market unhalts, it could drop like a stone. And you don't know. It could do the complete opposite also. They could be putting in buy orders, and when that unfreezes, it could spike up to $4. There's literally no telling which way to go. And that's gambling. If I'm flipping a quarter to determine profit, that's gambling. And I could just go to Vegas if I wanted to do that. So I don't get into a halted market. VIVE had halted today. BNGO, DTSS, which none of us have talked about today. It's probably one of those ultra pennies. Yeah. This is a NASDAQ product, though. Quotes have resumed, it says. So this is from, we're game on, it looks like. Or it said we are. Well, this is a NinjaTrader VPA indicator that was brought over to Thinkorswim, and there was some adjustments made to it. So if we jump inside and we kind of scroll down, and you're looking for the VL, and you want to know what the VL stands for. That would be volume. Let's see. We'll just go to the labels, and that way we can see what the labels are based on. Ah, labels. If volume is greater than the volume average, then you'll see volume H. There's H, there's VL right here. So if volume is less than the volume average, minus the one standard deviation of volume, then you get volume low. Now, I'm not going to get all geek on you, but you're going to need to know a little bit about standard deviation and how that's applied to volume to be able to understand that, which is why the color codes are really nice, right? If you see that the label is green and you know that it's based on something to do with the volume and the average volume, then you can just recognize that it's bullish. Nope, I haven't done a video on this because I didn't create this indicator. But there was a really great description added to the indicator up here at the top, talking about the colors and the symbols and what those symbols mean and how to interpret that. To do a video on this, we would also have to do a video on all the mathematics that are in it, including the standard deviation. VL, volume low, right? Even if you turned those first three off, right? Even if you just turned off those, you still get short-term, mid-term, long-term trend, and then you get the analysis that it is doing, and it gives you the label, like failed upthrust or a pseudo upthrust confirmation. It's less bearish, right? That puts it in plain English for you. So, if you don't understand all of the labeling back here, that gives you a pretty good indication of what it's trying to tell you. So when it comes to looking at time and sales and level 2, if you haven't heard me talk about this before, other than looking at a market to see if it's halted or not, those are pretty much worthless. You can't beat an algorithm. The market has 30 seconds to report this trade, any of these trades. 30 seconds is a lifetime. So if you're looking at this and you're thinking that you're going to get some kind of actionable trade intelligence off of it, you're too late. The market is recorded in billionths of a second. That's with a B. That means trade orders are taken in billionths of a second. And they don't have to report it for 30 seconds. And the off exchanges, depending on what trade it is or what kind of trade or who is trading, they don't have to report it until the end of the day, which is why sometimes at the end of the day, you'll see a market right after the close do this really wild spike, and you'll see a wick like, a mile long. And that was because at the end of the day, the off exchange reported trades that had been going on through the day, and they were just all dumped right there at the end into the reporting. So you're not going to get actionable trade intelligence looking at level 2 and time and sales. Not only are you not fast enough to beat the algorithm, they just don't even give you the data in a timely manner to make it actionable. Doesn't mean that it's worthless, though. If you do have a trading strategy that relies on order flow, you're going to want to focus on something that gives you access to that kind of data. And Thinkorswim does not. So what you're going to want to do is use something like Bookmap. That is something that you have to pay for, and it has a massive learning curve to get to understand how to use it. But they do a really great job. They have classes and videos and all kinds of things to use their product. And considering on what it's like $30 or $40 a month. If you're trading based on order flow, then you're going to be making more than enough money to pay for that service. But it is a service. It's not something that you can get from free. And, like I said, if that's how you trade, make sure you're using a tool that can, work for you.